Airbnb is set to go public December 10th and is looking to raise $2.6 billion on a valuation of $35 billion. With the ongoing pandemic and more possible lockdowns, how is Airbnb going to fare in a post-pandemic world? And is the juice worth the squeeze with this hot IPO? Before we begin, don't forget to like and subscribe to support the video. Airbnb is valued at $35 billion. That's up from the 2017 funding deal that valued Airbnb at $31 billion, and a significant recovery from the $18 billion valuation it drew in April when it raised debt to help ride out the pandemic. Investors will be evaluating a business that looks much different than it did a year ago. Gross bookings in Airbnb's top 20 cities fell by half in September, compared with the year before, while bookings outside those major markets were down 19%. The company said in its S1 filing, international stays declined by roughly 2/3, and travelers taking lodging less than 50 miles from their home actually was the fastest growing part of the business. Airbnb has never fit into the existing category. Silicon Valley claims it's a tech startup, one of its shining stars of the sector once referred to as the gig economy. Hotel chains see it as a threat, while dismissing it as an online travel agency, similar to an Expedia or Booking.com, which connects vacationers on one side of the platform with the lodging owners on the other. While Airbnb does have similarities to these companies, they have managed to create a whole new travel category, transforming the activity of crashing in other people's homes into an alternative to hotels that either seem too boring or too expensive. For customers, it's an alternative to Marriott, not Priceline. The company is outshining online travel agencies and hotel companies during the pandemic, both of which it listed as competitors in its IPO filing. Unlike other travel agencies, Airbnb doesn't book flights, and it doesn't need business travel or big conventions as much as other traditional hotels do. All this left it less exposed to a significant shape of the pandemic-era weakness in travel. When COVID-19 turned hotels into potential infection zones, the company actually played up its ability to offer isolated destinations and incentivized hosts to offer discounts to customers booking for longer terms. The part of the travel industry Airbnb most resembles right now is actually budget hotels. Choice Hotels International, which franchises brands such as Comfort Inn, has also benefited from families canceling flights and taking road trips instead. Many motels let guests enter rooms from the parking lot, bypassing common areas and possible high infection zones. Choice's revenue fell 31% for the first 9 months of the year, right in line with Airbnb's overall within the same period. The company also shares one of the primary problems cheap hotels face, which is crime. Airbnb's party house problem has led to a lawsuit blaming it for roles in shootings and other crimes, plus the spread of COVID-19, but has recently highlighted measures it's taking to make its platform safer. Airbnb has also faced regulation in major cities. People are now renting out their apartments on Airbnb instead of renting them out to long-term tenants because they are making more money. This is feeding into the housing shortage issues that many major cities face. New York City has some of the strictest Airbnb laws in the world. In October of 2016, New York Governor Andrew Cuomo signed into a law a ban on short-term rentals on home sharing sites. Also, many areas that have homeowner associations have banned the use of Airbnb because it causes too much commotion as new people are always coming and going. Airbnb stated that they currently intend to use their net proceeds from this offering for general corporate purposes, including working capital, operating expenditures, and other capital expenditures. They may also use a portion of the net proceeds to acquire or make investments in businesses, products, offerings, and other technologies, although they do not have agreements or commitments for any material acquisitions or investments at this time. They also intend to use a portion of the net proceeds they received from the offering to satisfy the anticipated tax withholding and remittance obligations of approximately $1.2 billion from the offering itself. As of September 30th, 2020, Airbnb had $4.5 billion in cash and $6.9 billion in total liabilities. Free cash flow during the 12 months ended September 30th, 2020 was negative $687 million. Airbnb seeks to obtain new hosts as they are the core of the supply providers to its platform. Hosts learn about Airbnb through the word of mouth and online media. 90% of Airbnb's visitors come through organic search engine traffic or direct. So Airbnb has proven to be adaptive at avoiding the high and increasing acquisition costs associated with paying online marketing. Sales and marketing expenses as a percent of total revenue have been dropping as well, as revenues have fluctuated. The sales and marketing efficiency rate, defined as how many dollars of additional new revenue are generated by each dollar of sales and marketing spend, swung to negative 2.2 times in the most recent reporting period due to the drop in revenue stemming from the COVID-19 pandemic. According to a 2020 market research, the global market for hotels and resort stays grew an estimated 0.8% from 2015 to 2020. As the global economy has reacted to the onset of the pandemic, the hotel and resort industry has contracted. However, the industry continues to shift investment towards emerging economies as those regions improve their tourism infrastructures. Also, as the world begins to move past the negative effects of the pandemic, with improved treatment, herd immunity, and vaccines, pent-up demand for travel will likely return, providing growth to the industry perhaps as soon as 2020. The bottom line is Airbnb has definitely been hurt by the pandemic, like all travel-related companies. However, they have the ability to adapt and position themselves as an alternative to traditional hotels. They've also spun the narrative as being safer in a pandemic, because you have your own space with no high traffic areas, like you would in a traditional hotel. The company definitely has a high valuation, but I think the travel industry will return, and people are ready to go travel as they have been locked in their homes. Airbnb is definitely here to stay, and it looks like they still have room to grow. And with that being said, as always, thanks for watching, and if you enjoyed the video, like and subscribe to see more.